Okay, welcome back to the channel. We're gonna do a trade review for July 22nd. Today was a good quick trading day. I don't really have too many complaints about my performance here, so I'm happy to have gotten in and out of the market pretty quickly and gotten satisfactory results. Okay, so let's pull up my trading performance for the day here. Okay, all right, cool. So today, 7:22, traded the New York session. I only took, okay, so let me preface this, right? Okay, so I'm trading all Apex accounts on the Tradovate broker, and I'm trading 11 accounts currently simultaneously through the Tradovate copy trader. It's just built in. So just keep in mind that everything that we're seeing occurred across all of my accounts that I'm trading, okay? And even though there was only one actual trade taken today, Tradovate will count it as two because there were two separate limit orders for exiting the position. Okay, so hopefully that makes sense. So one trade, one entry with two MNQ contracts across each 11 accounts, okay, and two separate take profit limit orders to get out of the trade entirely. Okay, so that's why Tradovate is going to count it as two trades as opposed to one trade. Okay, so if we look at the day, I only took one trade. It was a winning trade. It looks like the max drawdown was very low in the trade. Total profit was $150.50. And again, two limit orders to get out of that position. Yeah, okay. And let's see. So in commissions, paid $2.08. That is really good in comparison to the profit. So obviously a 100% win rate on the day. And then if you're not familiar with how Tradovate will break all of this down, it's giving the P&L history. There's not really a lot to look at because it's just one trade today. So this is just giving some other breakdowns. But let's continue to the bottom. And then we'll see here the quantity was two MNQ contracts. This is the full duration. This was a quick trade. Wow, 3 minutes and 11 seconds. And this is what each of the contracts made while that trade was actively going. Okay, all right, cool. So let's get rid of this screen and then let's jump over to trading view. And I just want to break everything down in the trade, and what I want to be able to answer are these things right here. I want to know, I want to document the instrument that I'm trading with, whether or not my rules were met for the entry before I entered, the time frame, the max risk, which was intended versus what was actually taken. That's something that I look at to make sure that I'm staying within whatever my rules were and whatever my risk management plan was for the day. I want to look at, was my target actually hit or was it not? The intended position size versus the actual position size, directional bias, time of day. I don't really worry too much about the actual entry and exit points. The profit and loss that was profit or loss that was made on the trade, entry criteria and the exit criteria, and then whatever mistakes were made, I like to notate that and then notate any notes that would allow me to identify any areas for improvement. Okay, so that's what we're going to be looking at. All right, so let's jump back over to trading view, and we're going to take a look-see at the 1 hour time frame, and we're going to look at exactly how I identified this area for entry at all, and then put the actual trade and all of the components of it up against the criteria, all the questions that I'm looking to answer, basically. Okay. All right. So if we look at this, we're looking at bars as opposed to candlesticks. But essentially, you can see here that I have the order blocks mapped out. So the purple, we'll just call these extremely long rectangles. The purple ones represent the bearish order blocks, and these orange rectangles represent bullish order blocks. Okay, so what we're going to do is let's turn it back into candles, and then what we're going to do is we're going to find actual Fibonacci retracement levels here. So I did take, my directional bias was a long in this particular trade, and so what we'll do is we'll focus on the bullish Fibonacci retracement levels and the bullish order blocks here. Okay, so as we can see, we're going to find the 22nd New York session. We're going to go from about from 9 a.m. is really where we're going to focus. Okay, so we're going to go down, we're going to drop down to this candle here, and I'm going to run the fib retracement. And once I have that, I'm going to go from 9 a.m. to, is that my 9? That is the 9 a.m. Okay, perfect. So we're going to go from the 78% level right here, and we're going to start this at 9 o'clock, and we're going to bring it up all the way to the 50%, and I want it to go all the way to 12. So let me just adjust that, right? So we're going to make this green with the white center to represent a bullish Fibonacci retracement level. And we're going to make the rectangle smaller so that we can see the exact time frame that we want to be trading within. Because I don't like to trade after 12. I want to try to find all of my entries between preferably 9:30 and 12 o'clock New York time. Okay, so we're going to get rid of this fib extension level, or tool rather. Okay, so what we're looking at right here is we're looking at bullish order blocks, and then within that we have an overlapping Fibonacci retracement level right here. So we're looking at the 1 hour time frame, and when I drop down to the lower time frames, I'm going to be looking to take a long position right inside of this area of interest whenever the market meets all of my criteria. Okay, so we're going to go from there, from the 1 hour, and we're going to drop down to the 3 minute. All right, cool. So this is going to show where my primary area of interest would have been on the day if I was able to catch a reversal. And then aside from this area right here, I would also be looking from 9 o'clock to 12. I'd be looking to see if there's any potential at taking like a continuation trend, which is actually what I ended up taking today. So I do, once I look at market structure, identify order blocks, identify overlapping Fibonacci retracement levels, then from there I'm dropping down to the lower time frames, and I'm stepping out of the market structure mind frame, because I've already mapped that out right in the higher time frames. And so now I'm using a very different criteria for finding trades in the smaller time frame. This is just how I personally do it. Okay. Okay, so as we can see here, I would not have even had an entry into this area right here until after 11 o'clock, and I was out of the market by like well before 11. Okay, so the trade that I ended up taking, right, because I looked in the lower time frames here and I noticed it's very obvious, right? that we've got the market pushing up, and then I saw this pullback right here, this break of structure, pullback, and those are the ones that ideally I do want to be in, because those are the ones that typically will go the greatest distance the quickest. So when I identified this, I saw this pullback to the white line represents the 50 moving average. So I saw this pullback to the 50 moving average, okay? And I want to see the stochastic look very congruent with whatever my thought process is. So if I'm thinking that this is a pullback, I want to see the stochastic pullback as well out of this overbought region, and I want to see a cross back up. I want to see these signals cross again, indicating a bullish move back to the upside. You can see this in price action. You can see it with the candlesticks as well, but I like to be able to very clearly see it with the stochastic as well. That's just a personal preference. Okay. Additionally, if I'm gonna be bullish, then I want to see 2 consecutive green candles, and we did get that right here. And so when we got this bullish move back up to the top, I let this candle, I believe, push down a little bit before I entered. And so if we go back and we look at my actual entry, we can see that this was a buy. Okay, and the buy was this is 6:45 Mountain Standard Time, so we're gonna have to convert that and take that to New York time. So it would have been 9:45 New York time, and the entry price was 19,972.50. Okay, so if we go back, we're gonna set this up. And we're gonna try to just make sure like the timing and everything is correct. So we know it was on this candle right here. And what did I say? 19,972.50 at 9:45. All right, so here is the 9:42 to 9:45 candle right here. And so we'll just bring this over to match the correct time of entry. And we know our entry price was, I literally forgot it already again, 19,972.50. Okay, so we're going to input that, 19,972.50. Okay, so that is our entry price, okay? And the stop level, my stop would have been below this swing low right here. Let's open this screen up because I don't need the indicators anymore. I've already verified that they look the way that I would want them to look for this entry. Okay, so our stop is going to go below this swing here. And so that would have put us at 72 even. So let's mark that. And we'll get the exact, it's off by 1 tick. We'll bring that down. Okay, perfect. So that's where the stop would have been. And the way that I would have gotten my exit point would have been to take the Fibonacci retracement tool and to run it backwards off of the preceding leg and to take the most conservative portion of that. And that would have given me a TP1 right here at this 1.618 level, and my second take profit would have been right here. So we did not hit that level. We only hit my first take profit, and my actual exit point looks like we have 20,008.75 and 20,011.5. So this would have been the first exit order. No, actually this would have been it at 6:47, which is 10:47, or I'm sorry, 9:47 New York time. So 20,008.75 profit, 20,008.75. All right. So, all right, good. So that was the first take profit level, and that was hit. And I was hoping to get up to at least the 2.272 level, but that did not happen. And then once we moved up a little bit, I did drag my stop up so that at least if we did get a strong pullback, or if the market was just gonna move down and basically collapse the trade entirely, I would be able to at least capitalize on the profit there. And so that's why the second take profit ended up being 20,011.5. Okay, so that's how that trade went. So it didn't go at the distance that I was hoping to see it go, but it was still a good trade, pretty decent. So I was able to catch 145 ticks on the first take profit, and for the second, it would have been about 155 ticks on that. Okay, so again, did not hit the intended take profit, the intended final take profit, but it was still a good trade. I'm happy with it. The entry was good. It made sense. I followed all of my rules, so I'm happy with that. So let's get rid of that, and we'll get rid of this as well. And we can see, actually, maybe let's not get rid of that. And we can see that after the market peaked around here, we got this this gigantic move back down, retested the 50 and kind of popped right back up. But then we get this failure swing low. And once that happens, the market just runs all the way down. And I want to say, if we look over at this chart here, my 10-minute chart, no, we did not take out the liquidity on the day, but that's likely what we're working towards. But doesn't really matter to me because I'm out of the market at this point and I'm not going to get back in. Okay, so cool. Let's jump over here, and now I want to answer these questions for myself. So the instrument that I traded was MNQ. Rules met for entry, yes. The entry time frame was, so we mapped it out in the 1 hour, and then within that we found our move in the 3-minute and the 5-minute. The max risk that I took on that trade was $350 per account, and that was also the intended no, the intended risk reward is different. Hold on, let's look at that one more time. Okay, so the intended actual risk reward, we gotta measure this leg one more time. So the reason I want to know what intended risk reward was versus what it actually turned out to be, because then it actually allows for me to look to see if my risk reward makes sense over time, and it allows me to see well, before I got into this trade, this is what I was thinking, and this is what actually happened, right? Am I being impulsive? Am I following the rules when I get inside of the trade, or am I doing something? Am I deviating, right? Am I doing something different? So also, if we look at this trade, even the max reward on this only gives me this is a risk reward of 0.68, so it's not even a 1-to-1. So I would say ideally these are trades that I probably should be skipping. I should just bypass and not even take them and wait for a better setup. But this one I ended up actually taking, and it was still profitable, but not the best setup. So the intended reward should have been a minimum of a 1-to-1. And was the target hit? TP1 was hit. Intended position size. So this is where I go back and look and see when I got in this trade, I want to be risking a max of $350 per account. I can see that, my God, this stop had to be 402 ticks. That's crazy. So I actually should, wow. So I actually should have been in this trade with one MNQ contract per account. So that actually means that I did something wrong here. So let me pull out the calculator here for a second. All right, so if I had $402 ticks there, okay, times 0.5 because we're trading MNQ. So that means I risked $402. So I was off. I was over. Let me go back here. Okay, so I was over. Intended position size. So it should have been 1 MNQ, and the actual was 2 MNQ. So the max risk that I actually took was $402, and the intended was 350. So I was over. That's not terrible, but I would like for it to be correct every single time. Directional bias was long. The time of day was 9:45. I do like to keep track of the time of day that I'm typically taking trades, so I can see, like, am I losing? Like, when I lose, is it around a certain time? You know, when I'm taking most of my wins, do I have like a particular time of day where I seem to perform better? So I do like to keep track of that as well. The profit and loss on the trade was $72.50 and $78 for a total of $150.50. Yeah. And the entry criteria. Okay, so the entry criteria, this is like the most, well, not the most important thing, but this is very important. Okay, so I identified a bullish continuation trend in the 1 hour, 15 minute, and 3 and 5 minute time frames. Shorting was contraindicated by the 1 hour and 15 minute based on my rules. So I waited for a pullback in the lower time frame. Nasdaq tested and bounced off of the 50 moving average in both the 3 minute and the 5 minute, entered on the second bullish 3 minute candle. So that is entirely consistent with my rules. The exit criteria was fib I forget extension. There we go. Okay, fib extension 1.618. Second TP set at 2.272 and was not hit. Mistakes made. I don't think that there were any in this trade. I'm happy with this. Notes for improvement. I really actually think that this was done well. I think it was executed just fine. Or here, I'm sorry, let's go back. Mistakes made. I over leveraged, right? So I had slightly more risk than intended. Notes for improvement. You know, be meticulous about entering on time and assuming proper size in trades. Okay, so other than that, other than this little mishap of being $50 over the max risk that I wanted to be, this was actually a really good trade. So that's the only one that was taken today. Personally, like, you know, these days when I get a like a win in the first trade, I don't really honestly feel like I need to keep entering into the market. I just take the win and then I just move on with my life for the day. So it was a quick trading day. I'm happy with the results. I'm happy with the fact that I followed my rules very well today. I felt very calm while I was trading today. I didn't feel all anxious. I wasn't second guessing myself. I was perfectly fine with entering into the trade based on my rules, and I knew that if it was a loser, that's fine. A winner will make up for it later if I just stay within my risk parameters that I've already set for myself. So I'm super happy with what's happened for today. I hope that you got some value out of this. I like to do these videos obviously for myself, because I need to be recording my data for my personal trading and keeping track of things, creating data that I can study. And, if things need to be changed, the data will point that out. So I also like to do these videos to really just try to encourage newer traders that like this is the boring stuff that you need to be doing to make sure you're finding holes in your trading and creating constant, consistent improvement over time. So newer traders, just remember, like when we first get into trading, we think that it's like, we're just going to be like blitzed with excitement. And what you're going to, if you stay in the game long enough, what you're going to realize is it's actually really about patience and discipline. And it's really about, especially in the beginning, doing all these boring things like really, dissecting your own personal trading data so that you can make your trading system as strong and powerful as you possibly can. So I am a huge proponent on collecting data, journaling, studying it, back testing. You got to do all the boring stuff so you can make the money. That's just where it's at. So that's going to be it for today. I hope you found some value in this, and I will see you guys next time.